Good morning everyone. Welcome to ITM University Online. We are going to have a session on modern trends in banking. I'm sure all of us know what banking is and what is the importance of banking in the present community. In simple words, banking is nothing but accepting deposits and lending loans. Now, what is the importance? The importance is, as far as I am a depositor, I should get maximum interest rates. On the other hand, if I am a borrower, I should get lower rates. This is the principle of welfare economics. Now, what banks have been doing? We should appreciate the bank's greatest effort in transforming Indian economy. However, if I am a businessman, I am still worried about the interest rates that the banks are charging. Let us take an example. The banks presently, there is something called a term loan, which means for a fixed period of time you have to take a loan and you have to pay interest. The average interest rate is somewhere around 10.5 to 11.5%. As far as I am a businessman, I am investing money with an expectation that I will be able to generate returns. Now, on the other side, I have an obligation to pay 10.5% per annum. If my business is not generating that much profits or that much results, this cost will eat up my capital. Now, what is the solution for this? The solution for economic growth is the business community or the small businessmen should be given access to banking finance at much cheaper rates. How that is possible? One of the greatest initiatives which the Reserve Bank of India has taken in this step is differentiated bank licensing. What this is about? Before we get into what the differentiated bank licensing is, this has started probably 3 decades ago and this is the final output. What was there in the last 3 decades? Just 1-2 lines on that. I am sure all of us have heard about the 1991 opening up of economy. Followed by, in the banking industry, there was also an opening up. And that opening up was headed by the recommendations of a committee called Narasimham Committee. They said banks should not be working in a tight ecosystem. There should be competition in banking. For having competition in banking, we should open up. We should ask new players to enter the market and create healthy competition. So this started in 1994. There was few banks which were given licenses, followed by 2004, and presently 2014 another 2 more banks, that is in the microfinance segment, were given licenses. Now the latest what happened is a new trend in the banking era, that is, rather than going for branch licensing or bank licensing, they said let us have differentiated bank licensing. So, we'll try to get into what this differentiated bank licensing are. In one single line, it can be stated it is a game changer. So, it is going to change the banking system. It is going to change the way in which banks have been operating. How they are going to do? First one, this is the milestone or this is a benchmark policy in Indian banking. Second, this is a biggest initiative for financial inclusion. Again, I am sure all of us have read this in the newspaper. Roughly less than 53% have been covered under the official banking segment. Which means there are a lot of people even today who are depending upon other entities like pawnbrokers and non-banking entities for accessing of funds. The second initiative which was put forward in this context was Jan Dhan Yojana, which was also trying to mobilize a lot of people into the official banking stream. Now, next, the banking licenses or the differentiated banking licenses can accelerate the policy of the present government into a digital India initiative, that is cashless economy. So right now we are forced or we are asked to use maximum digital payments or to enable ourselves in the digital frame so that cash rotation or cash less economy is being achieved. Now, just getting into why this cashless economy is important, the latest information from a news article states that the domestic deposit, that is the people who remit bank amount in the banks in India, approximately is between 800 to 900 billion rupees. So this is the volume of money which is being circulated as far as remittance are concerned. If this is going, at least 50% of this is going cashless, the cost per transaction reduces pretty much. And once the cost reduces, as far as a borrower, I am happy because my interest cost also comes down. As far as a depositor, I have more options to invest. Sorry, what is this differentiated licensing in one line? Differentiated licensing is the banks are given licenses on the basis of their operations, which means Reserve Bank of India is a central bank of India who gives license, and what they are going to do, they are going to give license on various niche areas. So there has been a guidelines floated by Reserve Bank of India stating that either the private entities or the corporates can start up. There are two aspects called small finance banks and payment banks. These are the two areas in which differentiated licensing has been issued, and latest there are some more guidelines which are coming up, but we have to wait and watch for that. Before we get into the nuances, let us try to understand what these payment banks are and what the small finance banks are. First, payment banks. Payment banks is nothing but they are planning to revolutionize the banking industry by depending upon mobile technology for attracting the target customers, which means they might not have physical infrastructure space. They are going to use the mobile penetration model and attract customers. What is the benefit of this? Two benefits. First one, reach is exhaustive. Indian mobile penetration is somewhere close to 90%. So it is very easy to access the customers clearly because they all have mobile phones and they are forced or they can slowly come into the banking stream. Second, what is the next benefit? Since their transaction cost is based on technology, their cost per unit comes drastically low. What happens when the cost per unit comes down? It will be passed on to the consumer. So when the cost comes down, the interest rates also becomes, lightly attractive for both parties. In principle, as far as the paper is concerned, Reserve Bank of India has given license to 11 entities for starting payment banks. Some of the big shot players are Reliance Industries, Aditya Birla Nuvo, Tech Mahindra, Airtel and Vodafone. Again, in the newspaper, we all would have read about the success story of Vodafone M-Paisa, which says that in Kenya, remember that is Kenya, there are roughly 75% of the people, which means adults, who are using M-Paisa for digital mobile wallet. So even though we might call Kenya being a the third world country, which we should not call at any cost. However, they are much advanced in terms of digital banking or payment banks. So Vodafone M-Paisa has been already a mega hit. They have also started a payment bank in India. Now, what payment banks can do, what they can't do. First one, what they can do, they can raise deposits up to 1 lakh. However, they cannot lend loans. So payment banks, even though the word is called payment bank, the operation is they can accept deposits, they cannot lend. Next, they can enable transfer and remittances through mobile technology or through mobile phone. So third party transfers, utility payments like electricity bill, insurance payments, credit card payment, mobile payment, anything can be done through payment banks. Now we have understood about the uses and the applications of payment banks. It is also important how that is going to revolutionize the competition in banking. We expect that with more and more payment banks in place, all other existing banks will be facing tough competition. They would be forced to attract depositors by giving higher interest rates. Same way, payment banks with their lowest cost can pass on maximum benefit to the depositors, thereby helping both the economy as well as the depositors to get a better competitive rates. Thank you.